whether to invest or not, whether to invest today or not, or should I wait? Should I invest after 5 days, or should I invest after 6 months after the budget? Many people might be waiting for budget to come out, so that they will decide after budget what happens, and then let us decide whether to invest or not. So that is a very short-term horizon. So in short term, the graph of stock market will always be like this. But if you see 5 years, 10 years ka period, the market has always gone up, because Indian economy is always going to grow. Maybe at a shorter rate for some time, but it will cover up during the other years with a higher rate. So overall, over a period of 5 to 10 years, the economy is going to grow at a higher rate, and you are going to get the returns. If the companies are performing, if the economy is developing, means the companies are performing. If the companies are performing, that will reflect in their share price. If that reflects in their share price, that will reflect in your portfolio value, your mutual funds. And if that reflects in your mutual fund ka NAV and stock prices, if you are invested into that for that much of a period, you will get the returns. So you need to decide whether you want to focus on the 5 years ka graph, or you want to focus on the 5 days ka graph. You are very young generation. You are just starting your investment journey. That is why I felt I should take a lot of effort on you, because if you start investing in a right perspective and in a right manner with a right thought process, then only your future can be better. Because nowadays there are a lot of apps, there are a lot of information flowing on the internet and on mobile, but it is a information, it is not knowledge. So just by reading the information, don't get swayed. Since the mobile app of Upstocks and Grow, it is helping you just by left click and right click, buying and selling the stock, it's not guaranteeing you the returns. The simplification of process doesn't guarantee returns in equity market. You have to take efforts. You have to follow the process. You have to be patient. You have to be disciplined. It is applicable in all aspects of life. Just by seeing the ads, people have started thinking, hey, it is very easy. Just I have to right side, I have to click, then it will get bought. And then if I click left, then it will get sold. So it is very easy. 1,000 rupees I sold at 1,500, I made 500 rupees. It is not that easy. If trading was such an easy job, right now we have only 3 crore demat accounts. 3 crore demat accounts in India. What is the population of India? It is 130 crore. Because people cannot digest the volatility of equity markets, that is why lesser people are investing. So that is why the people who are investing have to have a longer time horizon, have to have a longer vision for investing into equity. I will bring to the last slide. It is just a quote by Raw Neuberger. What does it say? Your personal strengths will help you. It will help determine your success as an investor. Before you begin studying companies for investment, study yourself. So first you should study yourself. You should know what kind of investor you are. Are you an impulsive investor? Are you a patient investor? Do you have a long-term vision? Or you are coming with a trading mentality? All these things you need to have in your mind. Then only you can be a successful investor. So with that quote, I end my presentation. Thank you. Thanks a lot. Now the forum is open for question and answers.
Thank you, sir. It was a great presentation. You guys can put in your questions in the chat box or unmute yourself to ask the question.
My email address, phone number, everything is given over here. You can call me anytime, or just you can drop a message, and I will be very happy to answer you. We can go with the question and answers.
Sir, the first question is from Samiksha. She wants to ask, how did you start your investing journey?
Arey wow, very good question. I will be very happy to show you my portfolio. 1 minute, shall I? Please, please wait. Actually speaking, now I started my investment journey. I was working with L&T, Rasan and Tubro, as an engineer, and in 2002, company opened our salary account with ICICI Bank, and they also ICICI Bank only opened our demat accounts. So during that time, 2002-3, if you know, it was a bull cycle, and I was getting, and I was also young, like 27 or something at that time. So I was also getting tips from my friends, and I started investing into equity. But again, initially it was very small investment horizon. Maybe I used to hold for 1 year, 2 year, and then I used to sell the investments. Subsequently, at one point of time, my equity ka portfolio was around 1.5 lakh at that time, and the value of it was around 4.5 lakhs. So I was making a profit of around 3 lakhs on my 1.5 ka investment. At that time, I was thinking in 2008, that was in January 2008. So I was thinking, I have made a profit of 3 lakhs. So now let us sell all the investments and buy a Maruti 800 with that 3 lakhs. That was my dream at that time. But unfortunately, in January 2008, because of that financial crisis, the market went down and my 4.5 lakh became 1 lakh within 3 months. And then I came to know why my portfolio value has increased, why it has gone down. I had no clue. I was just investing based on my friend's advice, or somebody, my colleague was investing. He was telling me, you also invest. That is why I was investing. Suddenly that 4.5 came to 1 or 50,000, and that was a shocker. And then I realized that this direct equity investment is not my forte. It is not my cup of tea. I should invest through some different route. And at that time, I got a very good advisor, and he took me to mutual funds. I will show you my mutual funds investment. And from there on, in July 2008, I started my investment into mutual funds through two SIPs of 1,000 rupees each. So just see it. I'm showing you my SIP investment ka journey since 2008. Are you able to see it?
Yes, sir.
Yeah. So if you see, I started my SIP mutual fund investment journey in July 2008. Okay. I started with 1,000 rupees ka SIP at that time. 1,000 rupees ka investment I started with. Rather, it was a 2,000 rupees, 1,000 in another fund. That also I will show you. At that time, that fund which I started in, it was Aditya Birla Frontline Equity Fund. It was a large cap fund. So I showed you the categorization. No? So this was a large cap fund at that time. And the fund ka NAV was 57 rupees. It means the rate at which I can buy 1 unit of that mutual fund, it was 57. Since I invested 1,000 rupees, at 57 rupees NAV, I got 17 units. Okay. Now, if you see, since it was a SIP, systematic investment plan, in which you invest a fixed amount of money every month. So next month also I invested 1,000 rupees. At that time, the NAV went down to 56. So I got slightly more units, 17.63 as against 17.34. If you go down 3-4 months, you will see suddenly during 3-4 months only, from 51, the NAV went down to 39. The market went down during 2008. During that Lehman Brothers crisis, the market went down. It was very volatile. And in 1 month of time, the fund ka NAV was hit by 20%. 51 went down to 39. But what happened? Since I was investing 1,000 rupees, I got more units. It means when the rate, it was cheaper, the fund value was cheaper, I got more units. It is a logical step. When you go to market, you are buying onions or you buying potatoes, generally you get at 20 rupees a kilo. Sometimes you see the seller is saying now it is at 15 rupees a kilo. So when the rates are low, you buy more and you store it. The same way it is happening. In 4 months, if you see, after another 4 months, it went down further. It went down to 38 rupees. But I was investing same amount of money, 1000. At 38 rupees, I got 25 units of that mutual fund. I'll just show you the right side of it. Now come to the right side. The 57 rupees NAV was in the month of July 2008. I have not stopped this SIP. This SIP is still continuing. Yesterday, the day before yesterday, the NAV of this fund is now 355 rupees. What does that mean? The 17 units, if I want to sell now, each unit will give me 355 rupees ka rate. It means my 1000 rupees has grown to 6169. Come down. I told you I bought few units at 38 rupees. It was the lowest of the NAV in which I have bought the units. I bought 25 units. The same 25 units, if I want to sell now, each unit will be sold at 355 rupees. It means my 1000 rupees investment done in March 2009 is worth 9,190. It has given me 18% return. Now just think of it. I was a first time investor at that time. If I would have thought, from 57 it is going down to 39, again going up 42, then again going down 38. If you see within 1 year, within 12 installments, it went from 57, 51, 39, 42, 41, 38, 47. It again went up to 65. What would have been the normal tendency? I would have sold entire investment at 65 rupees at that time and would have made the money. But in actual terms, that would have been hardly 1000 or 2000 rupees. But I waited. I kept on investing. Now, if you see that this 65 rupees ka NAV, just keep a watch on this NAV. This 65 rupees ka NAV, it kept on increasing, 75, 81, 77. It was going up and down, going up and down. It went to 89. Again, it went down to 78. After 5 years, it touched 100 rupees. But I kept on investing 1000 rupees. Then thereafter, it went to 140, 150. I'll just show you the events. Then you will come to know. It was the first time in May 2014 that Narendra Modi government came to power. At that time, it was going up. After that, it started going up, 116 to 134. So the Sensex was going up during that time. From 116, it went to 153, 163. Thereafter, it again started going down. It went to 158. But I kept on investing. I increased my investment to 2000 rupees. Now, if you come to bottom of it, during Corona. During Corona, NAV of that fund just before Corona was 233 rupees. When market went down, it went to 174. It was more than 20% downfall. I kept on continuing with the investment. Now see what is my investment value. In last 13 years, through that 1000 rupees ka SIP, which was later increased to 2000, I have invested 2,80,000. Okay. In these 13 years, I have totally accumulated 2000 units of that Aditya Birla Frontline Equity Mutual Fund. That is a large cap fund. What is large cap fund? It is consisting of companies from the top 100 companies of India. Selected 100 companies. Selected companies from the 100. So these 2000 units, if I want to sell now, it will fetch me a price of 355 rupees. So 2000 multiplied by 355, my investment value is 7,37,000. What is my average buying price? I started with 57, invested at 38, 40, 60, 70, 100, 150, 200, everywhere I was investing. You see, my average buying price is only 134 rupees. So what is today's price? 355 rupees. My average buying price is 134 rupees. So what does it reflect? Even if tomorrow the market, Chinmay was asking na, ki whether you should invest when the market is at very high. You see, now this fund ka NAV is at all time high. It is 355 rupees. It is the fund's all time high NAV. But still I am investing and still I am in profit. Why? Because I am investing consistently. Because of that, my average buying price is only 134 rupees. Tomorrow, even if the fund falls by 20% from 355, even if it goes to 250 rupees, I will be still in profit. Because consistency. What is my investment return? It is only 15%. But you see the difference is in my investment value and the market value. What is the difference? Difference is 4,57,000. My investment is only 280 and that is value is 737. So this is a big money. Now just think of it. Coming to think of it, I think my investor should have been after me to invest more money. But maybe at that time he was also not very convinced. And since I was first time investor, he thought maybe he will start with a smaller money and then he will increase it. But if had my investor advisor pushed me at that time, the money would have been still bigger. Now see the Nippon Growth Fund, the example which I was giving you for 10 rupee NAV has become 2,151. Na? It is the same fund. I started investing in same July 2008. Along with that Aditya Birla Fund, I started a SIP in Nippon Growth Fund as well. It was at at that time the fund NAV was 324. That 324 NAV went down to 194. But today the NAV is 201.51. The 1,000 rupees which was invested when the NAV was 194, that is now worth 11,000 rupees. If you see the total investment ka value in this fund, my investment is 278, almost same as Aditya Birla ka investment. Here the valuation is 897. So what is the difference? The difference in valuation is 6,19,000. And what is my investment ka return? It is 19%. Why I am able to make the 19% rate of return? Because I invested consistently. I did not try to time the market. I did not wait when the market will become down, then only I will invest. When the market is up, I will try to exit. I did not do that. I kept on investing at all point of time. It is here also, because I invested all point of time, my average buying price is only 666. What is the today's price? Is 201.51. Even I am not worried even if the market goes down tomorrow. I will be in profit. What will happen? My profit margin will come down. That is okay. It is not possible to buy low and sell high at every time. It will always be averaging. And that is possible if you invest consistently. That is why I am advising many of the students who had attended the last time. I was telling them, whatever the part-time job you are doing, you should start doing some investments. But again, with a long-term horizon. Whatever the small amount that you invest today, you are only into your 20s or early 20s or maybe even not hit 20s. If you start investing now, it will make a huge difference in your financial life. Yeah, that's all from my side.
Sir, the next question
I was really
from,
wanting. Yeah, go on.
The next question is from Nikhil. Nikhil wants to ask, earlier you mentioned in the disadvantages of equity that you need proper skills to pick up good stocks. So could you give us your insights on what kind of skills do we require?
Skills means one is you need to have your own set of parameters. You need to have your own set of parameters which you want to, based on which you want to select the stocks. For somebody, it could be some people invest only into those stocks which have got a promoter holding of more than 25%. What does that mean? If the promoter is having more equity into the business, he means he has his own interest and therefore his business can do well because he has his skin in the game. So some people could have a different selection criteria. Some people might say the company which is giving more dividend, I will invest into only those stocks which is giving more dividend.